Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we would be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on key sectors and stocks that we should be focusing for the day and the next few trading sessions. Coming out of the Fed event, the frontline indices, that is Nifty and Bank Nifty, opened with a gap up on the back of tailwinds coming from strong global equity markets, and both the indices closed 0.7% higher. After registering a high of 107.11, the dollar index has slipped to levels of 106, while the US 10-year bond yield has cooled off to 4.68, which is a big positive for the equity markets. Coming to index levels, factoring the expected gap up opening, going forward the support zone is likely at 19,100, 19,140, and till 19,100 holds we can see further rebound in Nifty up to the levels of 19,330, 19,350 on the upside. Below the level of 19,090, the index can witness a bit of sell-off up to the levels of 19,020, 19,000, 18,970 on the downside. A major resistance zone would be seen around 19,350, 19,360 zone, and that needs to be watched out carefully. If Nifty sustains above this zone, then further short covering up to 19,440 cannot be ruled out in the next few sessions. Looking at the OI data for the next weekly series, significant put OI has been built up at 19,200 and the 19,000 strikes, while on the call front 19,200 and 19,300 witnessed considerable open interest additions. Overall range for the day could be 19,120 on the downside and 19,390 on the upside. Coming to Bank Nifty, going forward 42,900, 42,950 would be the support zone, and we believe that till 42,900 holds we could expect a rebound up to 43,500. The resistance is currently seen at 43,500, 43,550 zone, and Bank Nifty needs to sustain above 43,550 for potential emergence of positive momentum potential. Below 42,900, index could retest 42,550, 42,600 zone. Let's now see the sectors and stocks that are looking positive, keeping the short term perspective in mind. We feel mid-cap IT, reality, CPSE sectors could do well from here on. From a short-term momentum perspective, stocks like Oberoi Realty, Persistent, HCL Tech, Indusind Bank, Trent, Sun TV, Birla Soft, Godrej Property, MCX as well as CDSL looks well placed on the charts. If we observe the FI data, FI is sold to the tune of 1260 crores, while DIS bought to the tune of 1380 crores in the cash market segment. FI's long short ratio for index futures remains weak at 16% as they added 13,500 index futures short on a net basis. In the stock futures side, FIs have bought to the tune of 24,000 contracts, and on the options front, FIs have sold almost 1.4 lakh contracts, call contracts that is, and they have sold 1.3 lakh contracts of put options, indicating a contraction in volatility post the Fed event. Just to summarize, key support levels for Nifty being 19,090, 19,120 and resistance at 19,350, 19,380 levels, while for Bank Nifty key support would be 42,900, 42,920 levels and resistance would be 43,500, 43,550 levels. Above 43,550, Bank Nifty can witness further buying momentum up to the levels of 43,780, 43,850. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.